The Reserve Bank has maintained a small team based at the Australian Embassy in Beijing since 2011 to closely observe the Chinese economy. Deputy Andrew Hauser visited them a week after the so-called reciprocal tariffs were applied by the US, so his trip was well timed. And he found 4 key themes that nearly everyone he spoke to felt the Chinese economy was turning a corner. Liberation Day tariffs were a genuine shock in terms of scale, speed and scope. Australian companies in the country are still upbeat, and that's because China feels it has a strong economic hand in responding to tariffs to meet its 5% growth target, with expectations a larger share of the economic costs of US tariffs would fall on the US itself.
We found a confidence that the Chinese authorities had the tools, the policy tools, the space and the will to inject domestic stimulus needed to compensate for weaker trade growth.
RBA Governor Michelle Bullock is expected to travel to China at the end of the month to hold bilateral discussions with various officials. To the Australian share market now, which finished a little higher, the ASX 200 up 0.2%, driven by uranium stocks. It means for the week it's also 0.2% stronger. Today's gain follows a report Donald Trump may make it easier for nuclear reactors to operate in the US, adding to the influence the president has on global markets.
Now, I've been quite fortunate. I've been in the market for quite some time and I've lived through the GFC, COVID and not showing my age, but dating right back to the 87 crash. But this is the first time that one person has definitely had such an incredible influence on how markets react just through whatever comes out of his mouth, to be honest.
So of those major uranium stocks, Boss Energy did best. The utilities sector fell the most. Bendigo and Adelaide Bank, along with Myer, rose following earnings updates. The Australian dollar is down against the greenback to be trading at around 64 1/3 US cents. It's also lower against the Japanese yen as inflation there hit 3.5%. That's its fastest annual growth in over 2 years. Oil slipped amid reports that OPEC Plus nations were considering another output hike in July. Gold also fell to be trading at around where it was at the start of the week. Well, have you recently received unsolicited text messages offering work or seen job advertisements like these popping up on your social media account or websites? Well, the ACCC has warned they're likely to be scams, especially if they're being asked you to pay money to make money. The National Scam Centre received over 3,000 reports of these types of scams last year, with losses reaching almost $14 million. 78% of those were from people under the age of 44, while almost a fifth self-reported English as their second language.
We see some particularly vulnerable members of our community being disproportionately impacted by this scam. So it might be international students, people on low incomes, people from a culturally and linguistically diverse background, and people that might otherwise find it difficult to secure employment.
The National Anti-Scam Centre says it removed more than 29,000 scam accounts on social media and over 1,800 fake job advertisements and websites as part of its latest crackdown. It would appear cost of living pressures may be holding back younger adults from looking after their health despite an overall rise in health services spending. Analysis by the Commonwealth Bank of around 7 million Australians found on average $523 was spent on GP visits in the 12 months to March. There were also increases in pharmacies and specialists. While those over the age of 75 saw the biggest lift in health services spending, those aged 18 to 24 saw the smallest, just 3.1%, which is below the annual rate of health inflation at 4.1%, representing a decline in spending in real terms. And just 3 days after the Reserve Bank cut interest rates, Macquarie Bank customers will see their standard variable rates cut from today, throwing a challenge to the big four banks, most of which won't pass on the RBA rate cut until next Friday. Analysis from Canstar shows one smaller bank is even waiting 27 days from the RBA's decision. It adds 95% of lenders are estimated to offer at least one variable rate under 6%. Of course, a rate cut also impacts savings accounts, Anton, so it's best to compare.